Hi, this is Doug from forextradeplans.com. So recently I recorded a video based on my new trading methodology using combinations of pivot points over multiple time frames combined with Fibonacci retracement and extensions, combining all these elements together based on multiple time frames to get into very powerful moves. Of course, this is all calculated on this particular spreadsheet, which I went over in gosh, 2.5 hours of videos. So I'm not going to spend a lot of time on this spreadsheet on this video, and this is going to be a very short video. But just as a quick brief review here, this is the spreadsheet, and this video really is only going to be understood by people that have watched the previous 4 videos on this. But anyway, we got the multiple time frames here. We got the monthly, the weekly, the daily, and the 4-hour. We got the 1 hour and the 15-minute. We're not going to put a lot of time into those, a lot of emphasis into those two at this moment. They're not so important as the 4 larger time frames. Always remember the larger time frames trump the shorter time frames. We're going to just look at these in the very, very end and remove. I'm recording this video during on a Saturday night. There is no market right now. Okay, but we don't need to be in a live market to do this video. Here you see the open, high, range, low, and close. Okay, for the sake of this video, we only care about the high and the low, and we're going to care about all this data over here. These are all the pivot points, and we're only going to concentrate, for the sake of this video, we're only going to concentrate on the daily data. Okay, just this data here and this data right here. What I'm going to do, okay, this is, by the way, here is the pivot points, okay, the high, the low, and all the pivot points, and then down here is the Fibonacci retracements of the previous candle range over here in the center. To the right are the Fibots, the resistance Fibots, which is just nothing but Fibonacci extensions of the range. And over here on this side are the support Fibots, which is just extensions of the previous range going in the other direction. So this is what we're going to do. The thing is this. You can't trade off of a spreadsheet. You can't just look at the spreadsheet and look at price and trade off the spreadsheet. You have to trade off the chart. So how do we take this data here and trade this data but off the chart without going back and forth like this? We can't do that. I mean, we can't do it. So this is what I ended up doing was I created a template. This is the template. I'm going to open up a Euro-dollar chart. I'm going to expand it. By the way, these are the results of the templates. I'll explain that to you after I actually make a chart for you. So let's go back over here. Going to open up this chart. This is going to be a chart that's going to reflect the daily data. I'm going to do that on a 15-minute chart. So let's turn this into a 15-minute chart. I'm going to right-click on this chart, and we're going to choose the template that I made, which is called Pivs Fibs. Here we go. This is how it looks. Now take a look at this. We have the objects list. And I already made, this is a template, so the lines are already here, and I already know what each line represents. Here we got the high and the low, and the high and the low are all represented by a very thick violet line, blue-violet line. That represents the high, the low, same thing. Here we got the central pivot point, which is, actually it should have been white, but white's no, it doesn't matter, which is a white, bold, thick line as well. Okay, and anyway, here we go. We got all the resistance lines are red. Okay, the support lines are green. Okay, because green support represents that the candle's going to go up. Up in Forex is usually green. Red in Forex means price is going to fall. That usually is represented by the color red. Here we got the M0s. M0 is red, but that's because if you break M0, you're going to go down. You keep going down. M1 is green. Okay. Oh, and the M's, those are the midlines. They're represented by dotted lines because I have to know what line is which. So anytime you see a dotted line, it's an M line. If it's green, it's a support line. If it's red, it's a resistance line, such as the M4. As with the M0, the M5 is green because if you break the M5, chances are price is, doing a breakout. Just like the R3, it's green because if you break the R3, it's going to probably keep going. S3, even though we call that support, if I put it red because if it's broken, it's probably going to keep falling. All right, now these are Fibonacci retracements of the range. 21.4 is the exact reciprocal of 78.6. Remember that. So these are all blue. Okay, they're all blue and they're all tagged what they are. 261.8 that's the resistance fib extension. They're all red, and all the S's are naturally green. Okay, so here we go. What I'm going to do now is I'm going to actually take my spreadsheet here, and I'm going to go over here to euro dollar. I'm in the daily section, so I'm going to copy that. Okay, and I'm going to go here to the objects list, and I'm going to paste that value here. I'm back over here. I'm going to go to the low. It's going to take a few minutes, so I'm going to do it as fast as I can. Of course, I can only do this. I can't do this for the 1 hour or the 15-minute, and we're not going to ever do it that way because I'll be constantly just doing copy and pasting constantly. But this is only going to be done a couple times a day, so it doesn't really matter. Look, trading is not easy. I don't want people to think it is easy. There is work involved. And if you want to make money in trading, you got to be willing to do the work. So just watch what I'm doing. Because you got to understand that you cannot trade off of a spreadsheet. We're going to use a spreadsheet to calculate the data, and we have to transpose that data onto the chart. But I know a lot of you are probably watching the reason I'm making this video, by the way, is I saw that a lot of people have been watching the other video, and they're probably thinking, gosh, this is really cool information. This is really good stuff. It's very mathematical, and it'll probably work, but how do I trade off of a spreadsheet? Well, I don't expect you to trade off of a spreadsheet. I don't expect myself to trade off of a spreadsheet. You're going to have to look at the spreadsheet here and there, but you're not going to have to trade off the spreadsheet. This is the daily. Okay, so obviously once a day we're going to have to update this. The weekly we're going to have to update, but that's once a week, and the monthly we're going to have to update that, but that's easy because that's once a month. The one that might get a little tedious would be the 4 hour, because we have to do that every 4 hours, but I'm already just about halfway done doing what I'm doing, so it's not really a big deal. You could do this every 4 hours if you had to, and you could even do it for a few currency pairs. And, bear with me, just watch what I'm doing, because who knows, maybe someday you'll be doing this too, and if you decide that you want to be a part of my live trading room, you're going to get used to seeing me do this. Just copying and pasting away. But you see now, I want you to see this in action, what I'm doing, because you'll see later on that these lines that are on the chart were not lines that were put there after the fact to actually make it look like the lines were drawn around support and resistance. You're going to see that these lines, all these figures are coming right off the spreadsheet. And this would work be a lot faster if the arrow was working, but for some reason my video card is so lousy, it's so weak that I can't do Camtasia videos and have arrow on at the same time. I have to get a upgraded video card. If if I'm going to keep making these videos. And I may even have to get an upgraded video card to operate a live trade room. Alright, I am 75% done. I'm just doing the Fibbits now. I have everything designed really carefully in the template so that, you know, everything is like right in order. I've gotten used to doing this quite a bit. The final product is going to be really cool. You're going to see it in just a few more moments. If I was a decent singer, I'd hum a tune to you, but I'm a lousy singer. I guess we'll just have to fake it. Alright, almost done. Just a few more to go. Alright, now I'm just doing the supports. Oops. Also keep in mind it's kind of dark. I'm in a dark room. Actually, my wife is actually in the same room with me right now, and she's sleeping, and so I got the lights off, so I can't really see the keyboard so well. Alright, last one. We are done with that. Okay, cool. That is done. Now, there you got it. Now, this line, by the way, this all represents really, yes, since 5 p.m. New York time. So just so you see, I don't want you to be looking at stuff that's out of the realm of time. So let me just move this line to 8/4 at 2100 hours MT4 time, which is really 5 p.m. New York time. Okay, so technically all these all those values off the spreadsheet came to play at this exact time right here. Okay, so what we have here is two things. We have a yesterday's low, and actually yesterday's low is actually right here, really, and we have an overlap of the M2. Now keep in mind that this is the very beginning of the this really starts at 5 p.m. New York time, so you don't have a lot of action. This is Australia getting into the market. They start their session. Usually when they start their session, there will be some type of a sudden move like this. Okay, this is the beginning of Australia. Okay, then the market, comes up, and the price comes back up above the previous day's low, and it seems to stay above it. Okay, but it really seems to be actually living right here on this line. Well, this isn't. There's nothing magical about this line. It's the previous day's low, so of course, the price is going to react to it in some way. And this right here is the beginning of the Asia session. Well, look at what happens now. Price seems to be hovering above the previous day's low. But is that what's really important? The previous day's low? It probably is important, but also the little dotted line here that seems to overlap with it. This is the daily M2. That also seems to be kind of important. Prices started out on the daily M2. Usually when it starts at the daily M2, it usually goes to the M4. But it doesn't actually have to go to the M4, but it usually, usually in pivot point theory, M2 will usually dictate into a move to M4, but in this particular case, it didn't because M4 is up here. Anyway, let's take a look at what happened here. So price comes and it goes just above M2 and the previous day's low. Fibs goes back up, comes back down, touches it, comes back down, pierces it, breaks it. price now comes over here and it hits this line. This is one of the fib lines. This is the 21.4/78.6. There seems to be a reaction here. If we zoom in a little bit on here, we will see that price precisely touched this fib, and it reacted. And in fact, it came down, and it came all the way down to here. This would have been a great entry, and this would have technically been the entry of the entire of the swing for the day. If you literally look at this, this is really what happened. If you take a fib reading here, price came up here, it came down here, it closed, it opened here, but it fell all the way over here to this 50% fib. This is a fib within a fib. Very, very powerful. So if you could have actually took this entry right here this long, and you could have really stayed along, you know, for until the very next day, and you would have made 41.10 to 42.70 something, 42.80. Yeah, you would have made 170 pips that day if you got in over here. But there would have been other factors involved that would have got you in. But then look here what finally happened. Price sort of hovered over this fib line. Now that to me means that there's some significance with this fib line. This fib line, remember, it's a combination of the 21.4 and the 78.6. Okay, so if it's a combination of the 21.4, 78.6, then that means that that really it's the 21.4 is acting as resistance, and the 78.6 is being looked at as support. That's why over here it's acting as resistance. Price doesn't seem to want to break it, but over here it's acting as support, because the 78.6 fib would have been regarded as a 78.6 support line fib. So this is a very powerful line. It's basically a row reversal line, and as you can see, there's no question about it. It became row reversal. See, look here. Starts out as a 21.4 resistance, breaks it, and now it's a 78.6 support line. Here's the central pivot. If you noticed here, price is fighting with it. It really doesn't want to seem to break it. Look here. Almost pierces it, comes back down, comes all the way back up, pierces it. I think this is the non-farm payroll. I'm not sure. But it doesn't matter. We don't care about any of that right now. We're just talking about the technicals. What also probably added a little bit more validation to this was this particular 38.261.8 line over here. So it acted also as resistance, overlapped with this, so price really had a tough time breaking it. But look, it finally broke it, and look what happened. It became support. Okay, it fell right back down, precisely hit this line. How do you explain that? These lines, I did not draw them after I saw price. These lines were drawn based on the calculations in the spreadsheet, yet each one of these lines are being respected. I mean, the space here is not really being respected, okay? This might be respected, but this could be another type of line in another time frame. We're going to check that out in just a few minutes. But something's going on here. This is not smoke and mirrors. I mean, this is not lines that were drawn after the fact. These lines were drawn before any of this happened. And okay, pivot points, I totally understand. Of course the central pivot point is going to be respected. We all know that, but look at this fib line. This is a fib line that most people would never even take notice to. And look, it is being, it's definitely being respected. And so is this fib line right here. In fact, it's a 50% fib overlapped. Well, I don't have to see the tag to really be able to really know what this is. If this is the central pivot point and this is the R1, then we know that this is the M3. Okay, so here we have a pivot overlapped with an M3. Very powerful. See, price doesn't want to break it. It doesn't want to break it, but eventually it does, and then of course it fibs back. But look what happens here. Price comes over here, touches the R1. Now look, it falls all the way back down. Now look at this. Price seems to be screwing around here with the 61.8, 38.2. So these fib lines are very, very important. Price seems to be a magnet for it. Price, this is starting out as resistance, and it becomes kind of like a support zone. Resistance, support. Price just doesn't know what it wants to do. It's confused over here, or it's staying in between these two zones. Okay, now let's take a look here at this candle. Let's take a look at the time. 8/5, August 5th at 8:30. I'm going to go ahead and close this chart. We've seen enough of this. We're done with it. I just wanted you to see how I take the data from the spreadsheet and put it on the chart. Now remember though, I keep telling you that everything we're doing is across multiple time frames. You can't just look at one time frame and base your trades on the one time frame. Alright, so once again I said let's take a look at this. So we're talking about the time frame, okay, August 5th around 08:30, that's AM, 8:30 to about 1300. So 8:30 to 1300, I'm going to close this chart because I got the same chart way over here. This is that same chart you just saw, okay? I mean, oh, I'll get into this in a few more minutes, the EMA. But here's the chart, okay? We were talked about 8:30. What was happening at around 8:30 based on this chart? 8:5, 8:30. Okay. So we were wondering what may have been support over here at around 8:30, which is right here. You know what? I'm going to go ahead and expand this. Let's go ahead and find 8.5 around 8:30. Keep in mind that this is an hourly chart. The other one was a 8:30. Okay, right here. Right here, 8:30. Okay. No, wait. No, let me zoom in. I want to find 8:30. Or at least 8 o'clock. Okay. Okay, this is that same time area. Well, not too far below it, we got the S Fibit, the 138.2. But it's not quite to the pip. It's at 41.11, and here the low was 41.22. So there's about 11 pip zone here, over here. So within 11 pips from that area that we were looking at on the 15-minute chart with the daily data, on this 1 hour chart with the weekly data, we have the S Fibit 138.2. So that probably, could it be that that had something to do with that range, that support that we were looking at? Could be. Let's take a look over here at the euro dollar. I'm sorry, at the 4 hour chart, but this is the monthly pivot point. Let's see if I could see what was going on around 8 a.m. Well, this may very well be what would explain that range at around 8 a.m. Let me zoom in on this. Alright. This is the fib 38.2/61.8. That means that the 38.2 would act as resistance, and if broken, then it would become a 61.8 acting as support. As you can see here, it was resistance. Remember, these blue lines represent fibs, and it represents two fibs, the reciprocals. If it's the 38.2 first, then that would be the resistance, and then the 61.8 would be considered as the support. Well, here it was support. Then it became row reversal. It became resistance. See? And then it became support again. And the funny thing is, price is practically hovering around it right down to the pip. But to add a little bit more validation, to this, we also happen to have had an M2, a monthly M2 pivot point. So you put the two together in the mix, you have a really powerful line. Anything could happen. Well, this explains that little range we saw on the first chart that we looked at. So let's take a look. Now this is the 1 minute chart, and it is a it's based on the 4-hour pivot points data. So I'm thinking that data might be kind of old by now at the end of this, on this 1 minute chart, because the 4-hour data, no, actually, no, it might be that exact same 4-hour data that was around that time frame. So now I'm going to go to 8.5 at 8:30. 8:30. Okay. This was really what may very well be causing that support that we didn't see on the 15-minute chart. This is the 4-hour M1. 4-hour M1 acted as support at that time. Okay. Not only that, but a few pips underneath, you had your 121.4 fibit, support line. Huh. Okay. Makes you wonder. So you see, we can't just look at one piece at one time frame. We have to look at multiple time frames. So I explained it in the thread, but I'm sure not all of you read the thread. Oh, by the way, these charts have another element that the other one didn't have. I decided that I really need to have at least one trending EMA. I felt kind of like something was missing without an EMA. So I decided to go ahead and put one EMA on there. Since I usually trade with multiple EMAs, but that wouldn't look right on these charts because I really don't want to pay attention too much to indicators or EMAs. I just want to look at the data from the spreadsheet. I decided to at least have one EMA. So what I did here is on the 4-hour chart, which represents the monthly data, I went ahead and I put an 89 EMA, which by the way is a fib. Okay, I put over here on the 1-hour chart, which represents the weekly data from the spreadsheet. I made this EMA a 55 EMA. Once again, that's a fib. On this chart here, which is the 50-minute chart, but it's displaying the daily data from the spreadsheet. I have a 21 EMA, and here on the 1-minute chart, which displays the 4-hour data from the spreadsheet, I have a 13 EMA. Okay, so each EMA is different. Okay, and as you can see, price seems to also ride on the EMA. It gives us an extra area of confirmation. Now you're probably wondering what these lines are. Well, these are trend lines. Okay, these are the only lines that I'm drawing freestyle, okay, on this chart. All of the straight lines, horizontal lines, are strictly lines from the spreadsheet. I will not put any more horizontal lines on the chart. I will only put horizontal lines that are from the data from the spreadsheet. But I really thought I should at least draw some trend lines. So here I got a few trend lines, just these type of lines right here. So I'm not going to overdo it with the trend lines. I'm just connecting highs and lows. This is a very important trend line because it shows us here that we're in an apex, probably Sunday or Monday. Well, this is a 4-hour chart, so I think soon a breakout. Well, we're not too far from a breakout. As the closer price gets to the nose of this apex, the closer we're going to get to a breakout. Which way will the breakout go? I really don't know. But this is definitely consolidation, because when you're getting a series of lower highs and higher lows, that's all just consolidation. Price is going to compress itself somewhere here into the nose, and then we're going to have a breakout. Where will it go? I don't know. How far will it go? I could pretty well tell you. figure out how far it's going to go, we just go ahead and we take a line like this, and we sort of measure the distance of the apex, and then we take that line and take it to where it's going to break. And so if it breaks, more than likely the price will go all the way up to where this trend line, where this line goes, which actually make a lot of sense because that would actually overlap with this pivot. Or if it was to fall, probably fall down in here, which that would also make sense because this is another pivot and this is a monthly S2. So I guess we'll have to watch for that to happen. Here on the hourly chart, what this has really become is this little channel here, which I'm not going to draw a channel in this case. I'm going to leave this as an apex. But here on the hourly, a part of that apex is really just a channel. So same type of rules follows. What's going to happen? Price may very well come up here to the top of this channel, maybe touch this fib level. There's a very good chance that price is going to come on over here and it's just going to fall all the way back down. But if it was to break it, it would come on up, it'll break it, but it'll definitely hit the, well, actually this is going to change because this is based on weekly data and this was on Friday. So on Sunday night, this data is going to be recalculated. But if it wasn't, technically price would break this, touch this pivot point, pull back down here, and then it would take off like a rocket. How far will it go? Same kind of deal. We do a little measurement just like, whoops, I didn't mean to do that. Same type of deal. This has nothing to do with the stuff that I've been covering in the thread, but I just thought I'd show you just for the hell of it. We take a measurement, and we can take a pretty low guess how far it'll go. Okay. So more or less be your target right here. I would set this right here as my target, but once again, this data is going to change on Sunday night. This data. So here, this is the same channel. Price is writing on this line. There's the 1 minute. Isn't that kind of cool? I mean, these lines were not drawn like after the fact in hindsight. These lines are all based on that data. I mean, there's something about that data on the spreadsheet that it's like magic. I mean, come on, man. Look at this. This is based on that 4-hour data. How can that be? Right down to the pip. Wow. Alright. Well, now, the last part of this video I want to explain. Why would I still continue to use this chart while I trade? Well, the reason for that is this. I still got to take notice to the 1-hour data and the 15-minute data, more so to the 1-hour data. Now, I can't create a chart here with the 1-hour data. I actually tried doing that on a 1-minute chart once to see what would happen, and everything, you know, if you'll notice here, the central pivot point to the M3 is 2 pips, and even if we skip the M3 and went straight to the R1, that would only be 3 pips. So, and then to the from the R1 to the R2, it's only another 3 pips. So I kind of noticed that, I actually tried it, and I noticed that the lines were so close to each other that it just didn't look right. It just didn't make sense. Price is piercing through all those lines. So really what I do is, I don't go beyond the 4-hour. I take the data up on the 4-hour and reflect that on the charts. Remember, this is monthly data. That's on this chart here on the hourly 4-hour. The weekly is on this chart on the top right. That's the 1 hour. The data here on the daily is over here on the 15-minute chart. And the data here from the 4-hour is over here on the 1-minute chart. That seems to all look pretty good. It works out pretty good, I think. It's not an eyesore. You could see what's going to happen. Now, I look at the 1-hour data here, and I put the chart, you know, right about here, and I'm watching this. I'm watching, you know, these prices while I'm looking at the 4 hour, at the 1 minute chart with the 4 hour data, and I'm just sort of like using my head a little bit and just using this. I'm trying to actually, I'm looking at the 1 hour and the 50 minute at the same time. They're so close to each other, so I'm sort of like averaging them out with each other. So, and sometimes when I'm looking at the shorter term, I just look at the midvits and I'll average them out. Like, for example, the midvid here is 42.82. Here it's 42.80. So we'll just say 42.81 is kind of an important area to look at. Here it's 42.77, 42.80 here, so 42.78, 42.79 is an area that I would be watching. So I just sort of keep this around a little bit, but you know, I'm just glancing at it. I'm really just concentrating on these 4 charts at this point. I went ahead and I did it up for the euro yen as well. Of course, on the euro yen so far, I only did the monthly data. I'll do the weekly and the daily on Sunday night, as well as the 4 hour. I did the same thing with the pound dollar, pound yen, the Aussie dollar, and the Aussie yen. So when I start calling trades in my live trade room, I want to be able to call out as many currency pairs as possible. But the truth is, if you can't make 40 to 60 pips a day or 80 pips a day off the euro dollar, then you know you shouldn't even be trading. Sorry to say that, but you know, it's true. A lot of people ask me about fibs and why I love fibs so much, and how do I keep track of fibs, how do I calculate fibs. I'm going to show you real quickly how I do that. If you go here, if I expand this chart here, and I do this, here I got it here in my notes for an example. Here's fib sequences. How do you calculate fibs on a spreadsheet? Very, very easy. Do this. 0 is the first number in the Fibonacci sequence. 1 is the second number. The way we get to the third number, which is also 1, we do this. This equals this plus this. We go enter. Then I take this, and I just pull it right on down, and that's how you get the Fibonacci sequence. And you can just keep going on and on and on. Yeah? That's how I keep track of my Fibonacci's. That's an FYI for the day for those of you that are into Fibonacci just as much as I am, and if you wanted to determine different fib values, actually I already did it over here. That's how I test out my different types of moving averages and how I can keep track of all the different fibs. As you guys know, I like using 13, 21, 55, and 144 and 89, and on occasion I'll use the 233. Well, anyway, I think that's going to wrap up this Saturday night video. Okay, so anyway, that's how I do it now, and take a quick look here. So by looking at these 4 charts, what we'd want to do is we'd want to overlap this with this, with this, with this. This is the end of the day Friday, but had it not been, I would pretty well say that price would more than likely just tank. It would probably fall down to here, because this is the 21 EMA, or it would come on down, it would fall down to here. This would be 42.29. This up here would be 42.77. So if the market, if this was like on a Thursday, this would have been a great opportunity to enter a short down to here. Anyway, that wraps up this video. Hope you all watch it. I hope you get something out of it, and I look forward to seeing you all in the thread. Have a great weekend. And may the pips be with you.